Welcome to the Capital Stack podcast, brought to you by BWE's Arizona Team, bringing you the latest in capital market and lender news for commercial real estate. I'm Sarah Milley, filling in for your host, Ryan Dencheff. And now for the latest market news for the week of June 27th. As quarter end looms, financial markets have remained in a state of flux as investors hash out whether or not blistering inflation is nearing a crest. Amid entrenched inflation and fears that the Fed's intensified campaign will spur an economic slowdown, returns in the first quarter cratered to the worst since 1980 across equity and fixed income markets. Both equity and fixed income markets have experienced trembling in the second quarter as the Federal Reserve has increased its monetary policy in an effort to keep inflationary pressures anchored. Earlier this month, the Federal Reserve met market pundit expectations of a 0.75 point Fed funds rate increase, marking the largest move of its kind in a single meeting since November 1994. With rampant inflation persisting, the Fed is now accelerating the pace of tightening up borrowing costs to tamp down demand in order to control the 4-decade-high inflationary pressures in the U.S. markets. Federal Chairman Powell did not rule out an additional 75 basis point increase in July depending on inflation and the economic strength. Last week, Treasury yields broke the third consecutive week of raises, with expectations moderating amid growing concerns of a recession. The benchmark 10-year Treasury traded in a range of 3% to 3.31% and closed at 3.13%. Now for up-to-date lender news, kicking off with life companies. Over the past week, we've seen corporates like single A and triple B corporate paper slightly contract, which have helped spreads from widening. Many lenders are managing their pipelines and continue to quote on all types of assets like industrial and self-storage. Life companies have remained steadfast despite week-over-week volatility. BWE's production team had significant growth in their life company allocations for the first 2 quarters, with more than $600 million in growth year over year, and exceeding $4 billion in production. Overall, life companies remain active and have strong appetites leading into the second half of the year. And now, switching over to agencies. The agencies have posted large months of production during the latter part of 2021, ranging from $7 billion to $10 billion, and are on track to hit their mission-driven and affordable allocation goals. Fannie and Freddie continue to pick up steam and remain competitive amongst the competition. Last year, they had a robust fourth quarter and could potentially repeat this pattern in 2022. In the current environment with rates on the rise, it will be interesting to see how the second half of the year plays out. On a positive note, purchase prices seem to be normalizing, and the agencies have reviewed more acquisition loans in the past 30 to 60 days. Additionally, the aggressive structuring from the bridge and debt fund sources seem to have cooled. Both factors should bode well for the agency production as we move into the third quarter. Shifting to the latest for the U.S. Department of Housing and Urban Development. Several new initiatives at HUD are making HUD-insured financing programs more attractive to borrowers. First is stat limits. The MBA and HUD are working on reforms to the statutory mortgage limits. The MBA is presenting a specific proposal to HUD so they can approach Congress with the request for increases to the existing per-unit mortgage limits. Next is surplus cash distributions. HUD has been working to change the biannual restrictions on surplus cash distributions to a monthly format, in line with industry standards. The Office of General Counsel at HUD just completed their review of the changes. It is expected that the revised policy will be in clearance this week. Next is the reduction in processing queue. The regional processing queues are rapidly decreasing due to the impact of the contract underwriter, numerous hires in the production departments at HUD, and also the increasing interest rates, which cause many projects to drop out of processing. The longest queue delay is now approximately 45 days, and some regions no longer have a queue. And last, the green MIP rates for healthcare projects. The Office of Residential Care Facilities just announced the rollout of a green MIP program for Section 232 projects. In many cases, obtaining a certification from LEED, Energy Star, NGBS, or any other programs for an ALF or SNF facility would reduce the MIP rate to 25 basis points, a major reduction. Lenders will have the opportunity to review and comment on the new program with the release of the new Lien Processing Handbook in the next few days. Rounding out this week's lender news with commercial-backed securities. The commercial-backed securities market has struggled to be competitive in the past few months as they navigate market disruptions. The current economic troubles have forced commercial-backed securities lenders to price considerably wider amongst their competition due to the bond markets and secured overnight financing rate being on a steep climb. They still have an appetite, but pricing in the high 5s to mid 6s has proven to be difficult to get deals done. However, they have the ability to do interest only and will continue to quote business. Spreads to AAA-rated commercial-backed securities spiked to 150 basis points from 90 basis points in January. Here's your quick market recap. Earlier this month, the Federal Reserve met market pundit expectations of a 0.75 point Fed funds rate increase, marking the largest such move in a single meeting since November 1994. Over the past week, we've seen corporates like single A and triple B corporate paper slightly contract, which have helped spreads from widening for life company lenders. Several new initiatives at HUD are making HUD-insured financing programs more attractive to borrowers. Thank you for listening to this week's Capital Stack podcast. For more information on what was discussed during this episode, reach out to BWE's Arizona Team.